What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, the people's champ of Wall Street. And today, my friends, we are talking about a little company by the name of U.S. Steel. Happy Halloween, because it is in fact Halloween. I was going to pop my face in here just to say hi. Quick, we got the new apartment here. I have a neck beard, so please ignore this. It's Halloween. I'm supposed to be dressed up when I come on camera, but I just wanted to say what's up. Man, look at that. That's bad. Yo, I gotta get it together. We're getting awful fuzzy here. So yes, I'm a werewolf for Halloween, guys. Officially. So I just wanted to say what's up to everybody. See, we got Robert Redford in the background, kicking it, having a good time. Got the new studio over there. Wanted to show you guys around this a little bit, but we're not gonna be doing that. We'll figure it out. All right, let's go back to our charts. All right, so a couple things. Should be rip-roaring and ready to rock this week with all sorts of fun stuff happening. Alibaba, Apple. Honestly, I didn't want to do Apple just because it's Apple. Apple. Let's talk about phones. Saw an article making the argument that Apple was a luxury brand. And when I was at the Porsche dealership yesterday, that's right, guys, I go to car dealerships like all the time. At the Porsche dealership yesterday, he told me that 90% of Porsche owners have iPhones. Isn't that crazy? 90% of Porsche owners rocking the iPhones. I did not know that. So, the green screen, first of all, Terry, how you doing? I got you, buddy. I got your recommendation. We'll do it. Kyle, sound should be all right. Trevor, how you doing? Good to see you as always. PJ, Jack, the green screen, working on it. We're getting there. It's a little wrinkly, so I've steamed it a couple of times now to get the wrinkles out, and I'm working on figuring out exactly how we're going to do this. With the least amount of kicking and screaming from the powers that be. So, not even the powers that be, just kicking and screaming overall. I'm trying to find a way where it's going to look good, where I don't have to do everything. So, I don't know. I'm on the fence. I like recording everything here. In here, and then recording it straight to the hard drive, and then uploading it, to YouTube, because it's much more clear. The sound's more clear, versus going, if we go via Skype, it compresses the audio. That's really my concern, is the audio. And even the video is a little. I don't know. But I suppose I'm not a video expert, so I just know what we do here looks awful. Looks awful clear when we post it. So we'll see. We'll see. I'm on the fence. We're going to figure it out. Aside from that, hopefully I get everything squared away in there, because I'm really excited. You guys really probably don't know me from the Trending Stocks days. Maybe you do. I don't know. Let me button this up. Sorry. Trending Stocks is my fun little thing I get to do where I just talk a lot of nonsense. It's like... it's like the soup or Taj.0 with stocks is basically how I like to call it, right? I mean, of course, that's a very broad, vague description there, but as promised, guys, where's Dr. Paul? Dr. Paul better show himself, because he's the whole reason why we're playing Tiesto today. He requested the Tiesto, and he's getting the Tiesto, okay? So, where's he at? I'm sure he'll be here shortly. All right, so you know what they had there? Patrick, they had a Scuderia. That's right, a 430 Scuderia. Not an F430 Scuderia, just so you know. They dropped the F in the Scuderia, so it's just a 430 Scuderia. But Jeff, I'm a werewolf today. If you look before, you can see how hairy I am, and I'm a werewolf. Tremblay, how you doing? So they had a Scuderia for 197. So Scud prices are coming down. Now, why do you guys care about that at all? You shouldn't. So much as this is how I look at it. And yes, we are going to talk U.S. Steel, and I know I'm going on a tangent here, but this is why. This is what I want to talk about, and not about this. I'm going to show you a little something. Let's say you had a bucket, right? This is my bucket, and a bucket's got water up to here, right? And you know that there's different buckets that this bucket can go into, right? It can spill into these other buckets, okay? Almost like a trickle-down thing, right? Almost like it trickles down. There's sort of this, the way I look at things is there's this, it's almost like Maslow's hierarchy of needs, right? But think of it in terms of other things. So what I mean by that, so here's money, right? And that's the water. So first I'm going to relate this to cars, then I'm going to bring it back to the market. So when you have just society in general has all this money, right? And they're going out there and they're buying cars. The first kind of car is going to be the need, right? The need car. So, like, I need that new SUV because mine is 10 years old and it's breaking down, or the family sedan, or whatever it is, right? You got a kind of need car. Then you have want car. So now you got the C7 Corvette, you got the Mustangs, you know, the sports cars and stuff that's like not really necessary, right? And then you got just the extra. So these are, you know, and this is an older Ferrari, right? But I'm saying that so a special edition Ferrari is going to be so far on the ladder of things, right? That when there's a ton of water or a ton of money, it's going to spill over to all these areas. And this last area of these totally unnecessary cars, prices are going to rise. But then the demand for those crazy things is going to dry up first. Who's going to be buying Scuderias, right? Once the existing demand that's out there has basically been met, like who else is going to go out there and buy a 10-year-old Ferrari, you know, for $200,000, right? Granted, they race them and they crash them, so it's a supply side thing, but it's not just at its simplest. And this is how I look at the market, okay? And a lot of my theories in the market is based on this, what I call the buckets of money approach into the markets, okay? So now we're going back to the water in the big bucket. So think of this as just all of the water. So like QE was dumping water into the bucket, okay? Easy money policies overall, right? Dumping money into the bucket. Now you got all this money, and then you go out on this risk ladder. So what's the first sort of risk ladder? Well, short term, right? High quality. So what do you mean by that? You mean T-bills, right? Things like that, okay? So this money goes in here, and then it gets full. This is all full of water. And then where do you go? Well, then you start to go towards, you know, further out bonds. So you go, let's call it the 10-year, right? And then you go to corporates. And you can keep on going, right? And then you get to, you know, really risky stuff, speculative, risky things. And the stock market's, you know, along this serpentine belt here somewhere, right? So at the basics of this thing, I have all the water that's in the bucket. Then, and again, I'm going to simplify this. We're just going to call this bonds. And then we're going to call this equities. Okay? And then all this other outside, let's just call it alternative stuff, right? So this water pours into here, and it pours into here, and it pours into here. And if there's more water than there's ever been before spilling out, then these levels are going to go higher than ever before because there's more water, okay? There's more liquidity. There's more money everywhere. So we're going to start to get in these situations where these equity valuations are going to get out of whack and they might never come back. Historically, you know, how could you make the argument for historical equity valuations if we're nowhere near historical bond rates? And people are wondering, why are bond rates continuing to be so low? Because there's so much money and it's got to go somewhere, right? So there's just so much demand, and this is certainly a demand side issue because there's so much demand now for things outside of just the cash bucket that money's got to go somewhere. So that's my theory. So when I see Scuderia prices dropping, then I think we're starting to come back this way. And that's no good for used car prices overall. And is that going to make an impact on the market? I think it does. And does this get back to U.S. Steel? You bet it does. Because I think you got to look at auto stocks, right, as a source of demand for steel, of course, and then construction overall, right? Now, more and more steel is being phased out of domestic auto manufacturing process. I know that. We all know that. They're doing more aluminum, composite materials, this kind of thing. But just an observation I had at the Porsche dealership yesterday, when my girlfriend decided that a Boxster was better than a 911. I smiled and let her have it. Quick, what is this picture? Pando, you need to explain yourself. What is this picture that Pando decided to use? What is this? What is this? What kind of blue, like Soviet? I don't know what's going on over here. Yeah, I think you can use it somewhat as a broad sort of economic pulse kind of indicator there, Pando. You know who they use better for worldwide? Copper. Copper uses copper is a great gauge of global economic output. All right. Now that I've distracted you all for the first 10 minutes of this, 12 minutes, holy smokes. Hey, I'm uploading at a much better bit rate today, by the way. I increased it, so hopefully this looks even cooler. All right, let's go ahead and take a look at U.S. Steel, the ticker X. As always, kick things off. The black line corresponds to the right y-axis, which is price. The green arrows are earnings beats. The red arrows are earnings misses. The multicolored lines represent the evolution of our Zacks consensus estimates over time. These correspond to the left y-axis. So why do I look at this? Well, because you'll note that price oftentimes moves up and down with earnings, right? I mean, after all, if the PE stays the same and you're dropping the E, you're bound to drop this P. So what happened here? You have this mighty crash, pretty much, from late 2014 into 2016, early 2016. You can see these estimates just boom. And the stock going down along with it, which should be refreshing to you. Why? Because earnings trends take a lot longer to reverse than price trend. Prices reverse on a dime, right? For whatever reason, somebody doesn't feel good, they're selling it, right? Whereas these earnings trends typically take a while to sort of develop. Now, you will note here, there's a little bit of herky-jerky action. Nobody likes the herky-jerks. We don't want to see any herky-jerks. We want nice, smooth growth. Perhaps that's what U.S. Steel is promising here since the last earnings beat. And you notice that, right? We got a big beat, and then we have estimates moving in a positive direction, coming down a little bit for 2018, but overall starting to move in a positive direction, right? So that's a good sign for the future prospects of U.S. Steel. So chalk one up there. All right. Then why are they down today, Dave? Because more people are selling than are buying. The RSX ranked number 3, but look, we got value, growth, and momentum behind it right now. Of course, that momentum score is probably going to take a hit here after today's action. However, the steel producers are still in the bottom 33% of our Zacks industry rank. Now, what does the Zacks industry rank mean? Again, it's not a bunch of us yahoos at Zacks going, I think this is in the bottom 33%. No. Based on what other analysts have been saying, what their estimates have been for the other companies, and what their ranks are, you kind of put that all together, and amongst the other industries out there, 265 industries that we rank with as Zacks industry rank, these guys are in the bottom 33%. They're going to report after the bell today. So again, we're going to talk about these options trades here that are just some ideas that you could use. But really what this is an analysis of where you think U.S. Steel is going to be going, and should you be investing in a company like U.S. Steel over the long term. Yes, we give you options ideas because, frankly, it's fun. But what you can gain from this is the actual analysis that we're looking. You can decide, what we're doing. Does that rank like a general algo or something? No, I mean, not really, no. But kind of yes, in the way that you define algo is just a thought process of stuff, right? The Zacks rank, you take agreement, magnitude, upside, and surprise, right? And based on those, it's compared to where all of the other stocks in the world are in those 5 regards, right? And then we chop it up into different pieces. So only the best are going to be a Zacks rank number 1, and then you got another small chunk that's going to be a buy. Most of them are going to be a hold. Small chunk, they're going to be sells, and then a very little chunk is going to be strong sells. So it's graded on a curve related to all the other estimates and stocks out there in the world, which is great because then it's kind of recession proof in that manner. Okay, so that's your Zacks rank of the day. Zacks rank lesson of the day. Sales estimates, revenues. Look at this. They're actually looking for 13.25% year-over-year revenue growth on U.S. Steel. Next quarter looks like 12.68. That rounds the current year out around 16. Now next year it's supposed to slow, 4.58. But next year I'll be a dinosaur. Right now we're looking at 16% for the current year. That, my friends, is good. All right, now EPS growth, current quarter, 68. That's spectacular. But when you're coming from a lower level, maybe it's not as significant. Next quarter, though, 142% EPS growth for next quarter. That's a feather in the cap. Current year number looks like 199%. Wowzers. And next year is supposed to swell another 53%. So turnaround story is what you're pitching if you're the guy trying to get some U.S. Steel. What have the analysts done recently? Well, over the course of the last 30 days, you got 3 analysts dropping their estimate for the current quarter, 2 analysts following suit for next quarter, 4 for the current year, and 1 for next year. If you look at the last 30 days on the upside, you do have a brave soul increasing earnings estimates for the current quarter, next quarter, current year, while 3 people have done so for next year. The overall effect to our Zacks consensus estimate, see, this is where it gets kind of, well, not the rosiest scenario, was 81 cents. Then they dropped it to 77, 76, and now we're talking 67 cents for the current quarter. Perhaps it's been forgiven. Perhaps that's why the stock is down like it is today. Next quarter, 76 cents down to 65 cents. So quarter over quarter, you're looking at a little bit of a contraction. Current year number, though, has gone from 146 all the way up to 176, and then they said, maybe we overkicked our coverage a little bit. Maybe it's going to be $1.59. So they pulled it back. Next year number, 226, 242, and then again, let's reel it in, but then they got excited again. This is just madness as far as I'm concerned. Smooth it out, guys. Get it together. Smooth it out a little better. We don't need this herky-jerky action, and I think that's why you're getting the herky-jerk, right? Oh, man. You know what? I forgot to open up our Internet Explorer. Let me go ahead and get this going on the side. I got the charts. We got to talk charts. We got to look at the charts. We always have to look at the charts. Upside, surprise. So this was the big surprise Panda was talking about earlier. Look at last quarter, huge surprise to the upside, and this is what we've got. I knew I forgot something, guys. I'm always forgetting something. Come on, let's go. Get over. There we go. All right. So let's take a look at the charts. Come on. Don't be shy. Really? You're going to do this to me? Okay, he only wants to go this way. And get the advertisements off the screen. And we're golden. Okay. U.S. Steel, my friends. So what do we have to say about this stock chart here? We've got a bottom in late May. Got this gap down. Must have been the last earnings report. My lines I got here, 50-day and 200-day, right? So you guys know how I feel about the death cross, right? I just think it's absolutely irrelevant. That's right. You heard it here. I think what's more important is its interaction with the 50-day and the 200-day, right? And here we have stock coming under pressure underneath the 50-day today, right? Not the most bullish of signs. Commodity channel index overbought, coming down through the zero line. That's a sell signal. So that those are obviously bearish signs. But look at this. You got a nice little trend line starting to develop, right? Had these series of higher lows. That's kind of been broken with today's action. Today could be that good old rope-a-dope, guys. Remember that rope-a-dope? That good old stop grabber? So they try and force this thing down, get the stops out, get the weak hands out ahead of this earnings report, and then they jack it up, right? Of course, that's what you hope if you're a bull. 200-day and the 50-day starting to converge. And you know how I feel about this death cross. I feel the same way about the golden cross, which is the opposite of the death cross, which is when the 50-day crosses over the 200-day. So that could happen here in the short term, which would be a bullish sign. Very oversold now on the CCI after that crossover, that sell signal, right? So perhaps she's oversold, looking for support here, but it's kind of tough to tell. Let me draw my volume at price indicator. One of my faves. So normally you have this volume thing, right? Down here at the bottom, which tells you the volume on which day. I'm not so concerned with that right now. This is the volume at the price. So I like this because it doesn't matter what day it was. I don't really care. I want to know where, right? I don't want to know when. I want to know where. So here we go. So where all this price action has been here, okay? And then it's kind of a little bit loose here. This is a level that's far out there, but this is certainly an attractor. But look at the markets came down here, absorbed all of this, and there's been buying pressure off of that, right? All this volume in here, and you're just getting towards the top of it. I'm going to use a little cursor here so you can see how this is just above that level, into the bottom of that gap. Did we ever get the top of this gap? No, they never filled it. Didn't fill up to the top of the gap, but it had been there before, right? So yeah, oversold, I think, especially intraday. I don't like that it's under the 200-day. I don't like that it's under the 50-day, but with the commodity channel index down at negative 172, it's awful extreme. Now we know that the earnings report is the great equalizer, right? It's a force which could push it in one direction or the other. So are they going to come in and break this thing down further? Or do they push up into these areas where there hasn't been so much volume yet, right? You're going to need a compelling story. You're going to need a beat. We are coming off of a beat. We'll see. Overall, and a lot of people ask me about that, and since I've been running Surprise Trader, I suppose I'll touch on it. They asked me about the earnings ESP. So this is like a little black box where we come up with hopefully a prediction for whether or not these guys will beat earnings or not. Because basically the way that we look at it is, if you recently have an earnings estimate to the upside, whoever's running the show over there, whichever analyst that might be, he better have a really good, he or she better have a really good reason for moving that estimate to the upside. So when we see these recent estimates, that has an effect on this earnings ESP. So this is a bullish sign, at least here. Okay. So let's go ahead and dig in here. We're talking bullish on days when we've got the market, we've got the stock giving up 5%. I know, and of course, in typical fashion here, I get a knock on the door during my video. This is incredible. I'm not going over there. I'm hoping it's just a mailman. I have stuff to do. I got stuff to do. Okay. All right, so let's take a look at this, guys. We've got. Where am I at? These guys are going to report. These guys are going to report after the bell today. So you got the rest of the day tomorrow, or the rest of the day, to decide if this is something you want to mess around with. And again, you don't have to mess around with this. You can wait till after the report, after the risk is gone, and then decide if you want to buy this for the long term, right? We're not here twisting your arm trying to get you to mess around with this. It's just fun to talk about. Now, as always, I'm going to go from the stacked view to the side-by-side view here on U.S. Steel. We're going to look at the $25. I always look at the front week because this gives us a good measure of this implied volatility, right? People love to talk about this. How much of a move is the options market expecting in this stock? Well, this is how you figure it out, my friends. Take a look at the at-the-money call and the at-the-money put. Circle them with your magenta on-screen marker. At-the-money call 100 by 108. We're going to call that 104. Add that to at-the-money put, which is 108 by 114 or 111. That's 215. That's the move they're expecting out of this bad boy. 215 divided by $25. That's an 8.6% move. Woo! They are expecting you to put some stank on this one. That is incredible. Let's go to my G14 classified chart, well, info ZRS. I forgot to look at these revenues here, guys. Sorry. Historical revenue. I know I'm getting a little off topic, but that's all right. We'll get back. I always circle it back in. It's all going to make sense. 2015, a terrible year. 2016, not so good either, but there's this turnaround. This turnaround is happening. And look at last quarter's. 3.1 billion with a B. And then this quarter, they're hoping for another 3 billion. And that's based off of 2.6 last year. So, guys, this is a good turnaround story. And if you can get that, I think the market's going to rejoice. Now, how has the market acted in the past? Do we want to look at valuations? First, let's look at this. Look at the detailed estimates. We got surprises, consolidated surprise. We're going to see what the stock has done a couple of days before earnings and after earnings over the course of the last several quarters. You can see June quarter had a 10% jump, had a 27% haircut in March, 5%, 7%, 19%. So this bad boy scoots. Negative 3.6, negative 13, a 19, a 9, a 10, a 10, an 18. Big numbers here. Big numbers, which is fantastic when you're looking at this options side of things. Because that means it flat out scoots. It moves. I think the key number is going to be here for you guys to look at when this report hits. Because look at the last couple of reports. The EPS, I suppose, might be one part. Well, it certainly is a part of this. But the revenue, I think, is going to trump EPS overall. So, big revenue beat last quarter. Good stuff. Revenue missed the quarter before. Bad stuff, right? And then, even if it's in line a little bit, it moves. There's a miss and a move. There's not even a miss and a good move to the upside. that was because of better than expected. They beat by 24 cents. So Jeff's asking a very valid question. Would it be worth it, a strangle from the big moves? If you believe that there won't be another big move, then the answer to that question is yes. If you're looking for a big move, you do the exact opposite of the strangle. That's the straddle, where you're long on either side of this. So the strangle would be short call, short put, because you want it to just kind of choke down underneath there. Where the straddle would be, buying both, going long and strong, and hoping it goes either way. We're gonna get directional, because you know what, we've been doing this non-directional stuff, and then I lose on the non-directionals, and then I get mad because I try to get too cute and overcomplicate it. And you guys can do it if you want. I'm going to give you all the options you want. But yeah, there's a good point, Trevor. Bunch of hurricanes, a lot of autos lost in them. They're hurricanes. They flooded out Houston. You got to make something, right? Not F-150s though, because those are aluminum, right? So let's look. Not side by side. Let's go to the stacked view. Let's keep it stacked. We will come back to this weekly expiration because I know you guys want it, and we will. The lotto is going to be there, and we're going to have one. I want to look at the November expiration and even further out. Look at this. Somebody. Who brought that up? I saw somebody bring that up. Adam brought that up. Thanks, Adam. And welcome, Adam. And what's up, Adam? Guys, 17,000 contracts at the 27 in the November expiration, and another 17,000 out here. Somebody putting on some moves here, huh? What do you think that is, guys? You think this is somebody selling these 27s and buying these 29s? Tough to tell. All right, give me a hot second here, guys. I gotta drink water when I do these because it's a lot of talking. It's a lot of talking. All right. So this is what I want to do. Market was looking for $2, a little over $2 on this. Let's look at some verticals. Oh, Nigerian's talking. Which one? I love both of those guys. A Nigerian or Nigerian, because they're two different things. Nigerians are from Africa, and Nigerians are from CNBC. Nigerians are from, what are they? They're Armenian, aren't they? Oh, 2 days back. I thought he was on live now. I got a retweet from Pete the other day. I'm trying to get on that fast money. Actually, I think the options show would be better for me. I don't know. Anyway, here's a little trick, guys, that we do a lot here. Do this a lot. So, this is so tempting. I want to show you two things. First is this 27-25 call spread. And then I'm going to show you the 26-25, okay? And the math behind it. So if you go long the 25, it's going to cost you 132. See that? This is November 17th expiration. Then simultaneously, if you sell the 27 call, you're limiting your upside to $2. But you're also getting back 60 cents of that. So 72 cents is the amount of money you have at risk. $2 is still your upside potential on that 72 cents. So that means you can make 128 on 72 or 177%. What you would need is shares of U.S. Steel to close at or above 27 at expiration. Now on the flip side, the halvesy, something we do a lot. It's still going to cost you 132 to go long the 25 call, but now if you go short the 26 call, you're going to get back 89 cents. So now 43 cents is your net outlay. The difference in the strike prices is only $1 in this case. So that means you got 57 cents of upside potential on that 43 or 132%. So you can make 132% when the stock goes from here to here, and then another, what was it, 45% for the stock going from here to here, okay? If you want to be aggressive, though, you gotta. If you want to be aggressive, well, if you want to be bullish overall, I think you have to be more aggressive because you've seen the way the stock moves. So I think the bull call, or the bull debit here is long the November, and we're not giving it a lot of time. I know this is a quick trade. The November 17th, 25. 25-27 call spread for, I already forgot the number, 72 cents, was it? 72-cent net debit. I like that risk versus reward. I like how relatively inexpensive that is. So you don't have to, this is something you want to roll the dice with a couple $100, whatever. You all got your own risk parameters. We're not going to go there. But that's a bullish idea. Now, on the bearish side of things, you basically do the exact same, use the same logic, okay? And if you notice, we're not getting these huge areas of trades going through on this side, right, on the put side. But the $2 takes you down to 23. I think it would do every bit of that should it start to break down. So, for the bears out there, I got all sorts of lines and stuff getting drawn out here. That's okay. We'll leave it like this. Bears consider going long the $25 put for $145, simultaneously going short the $23 put for 64 cents. Net outlays 81 cents. Means you can make $1.19 on 81 or 147% here. Now, if you notice, $2 move here isn't paying as much as a $2 move on the call side. Interesting, right? Bear debit is long November 17th, 25-23 put spread for, what was it, 81 cent net debit, okay? In terms of credits here, I wouldn't mess around with bullish or bearish credits on this selling these options because this stock has a tendency to move so much. So what's the point, right? We don't need to do it. Stock moves a lot, and it's relatively inexpensive. So I think this is a time where we want to be long some premium in some of these. Okay. Now, if you're hoping for post earnings drift, right? You don't think the stock's going to move that much immediately, but you think it'll drift. You can go out. You can go out to December. There's nothing wrong with that. This, you're really leaning on the Zacks rank and the positive uptick in earnings and hoping that it continues. And you can do the same thing if you did a 25. Well, let me clarify this. If you did a 25-27 here, it's going to cut into your profit margin a little bit. 25 is going to cost you 174. 27 is going to be 96. So 78 is going to be your net debit. So you're paying 6 more cents for another month, okay? A scotch more conservative. It's also not going to, in the event that this thing disappoints, you're going to lose less because you're going to have time value on that, okay? In case, things go awry. I am of the mind that all things market related seem to be going up, and I think we're hitting it. We're talking about this whole hurricane situation, GDP at 3%, right? Despite, and yeah, I think when you're looking forward to the next quarter, they've got to comment on that. There's got to be some building. There's got to be more demand that's coming through on this. So I'm going to be on the bullish side. So I'm going to say the trade that pays is the bull debit. Okay, that's 72 cent net debit, and that's pretty aggressive. I don't normally get that aggressive, but what the hey, right? Now, guys looking for lottos. So what is this? This is a very short-term trade that is going to happen in one day, and you have a very high likelihood of losing every single penny that you put into this. I'm just clarifying this, okay? That's exactly what the lotto is. But something that would pay off great if the stock were to outperform. I think that is these 27s for, 39. That's kind of what we want to target, is sort of a 40 cent. Because then if the stock goes up, 10%, basically you need a 10% move to put yourself firmly into the green on these. So pretty risky business, my friends. But if you're looking for outsized returns on some risky situations, should they have a blowout report, I think these 27s are the way to go. So the lotto would be the November 3rd 27 call for 39. Well, we'll just call it 40. Okay. There you go. And look at U.S. Steel starting to tick up here on us intraday. Here's another thing, everybody, I do want to share with you. Let's say that you put on... so I beat him to the punch. Let's say I beat him to the punch. Let's see what he has to say about it. Maybe we should tweet this out to him. Which one? Is it Dr. J or Pete? Who's coming on? I guess I'll have to pull it up. I got too much stuff going on right now. Okay. So there you go. If you put one of these on earlier on in the day and you find yourself up into the earnings report, don't be afraid to take risk off the table. Just take your profit. You don't have to stick around if you don't want to, or scale it back a little bit, that kind of thing, right? Bird in the hand is certainly worth two in the bush, my friends, all right? So that's all I got here on U.S. Steel. Mañana, I believe, is Alibaba. And then the day after that, we're going to be talking about Apple. Oh, we're rocking out now. This really shouldn't be on the Tiesto station, but I don't care. I can't stop, but I have to stop. I got to get out of here. We're done. Oh, Dr. J, good. So I want to thank you guys so much for coming out with me here on Zach's Live Trader. Join us in the chat room. That's right. That's what's going on the bottom of the screen. Shoot me those emails, livetrader@zax.com, if you're not already hooked up on our distribution list, so that you know when all of these are happening. And guys, Adam, Terry, the newbies coming in here, thank you so much for hanging out. You guys are welcome at any time. That's how everybody else started here. Jeff, Trevor, Tremblay, everybody. All the guys that are here and all the guys who aren't here. Yeah. PJ, we're all here. So thanks so much for hanging out with me here on Zach's Live Trader. I will see you all mañana for Alibaba. Have a good one.